Hey, I'm Jusko from ProbableMoney.com, and in this video we are going to look at the top 10 reasons why your credit card application might have been denied. But before I do that, I'm going to ask you to please subscribe to this YouTube channel if you have not already, and if you have already, I thank you for doing so. So, if you have recently had a credit card application denied, you might be wondering why this happened to such a good person as yourself. And so in this video we are going to look at 10 reasons why your credit card application might be denied, and I'm going to go from the least likely to the most likely, and you should also know that the reason your application might have been denied could be some combination of these. Now, this list is going to include some very hard facts, things we know are true about the credit card application process, but also some things that are maybe a little softer and there's a little less evidence for, but I've seen enough over the years to understand that there's probably something to it. So as we start the list, the things that I think are less important, those are actually going to be the things that are maybe a little bit softer in terms of hard facts to nail them down. And then as we get to the end and talk about the most important reasons that you may have been denied, those ones we'll know there's real evidence for. So let's do it. We'll start with number 10, the least likely reason you were declined, but the most controversial reason that I'm going to throw out here, and that is where you live. Now, it is all kinds of illegal for lenders to decide to give you money or not give you money or give you a credit card based on your neighborhood or your zip code or whatever. But that doesn't mean that it doesn't ever happen. Now, I personally have had a time where I applied for a credit card and I had to call in and give them a lot of extra information, and they ended up telling me that there had been fraud in my neighborhood, and so there was some sort of red flag around where I had lived that may have been the reason that I had to then give more proof to them. So if it's happened to me in the past, I'm sure it's happened to other people in the past. Now, it's hard to nail down what that means. Is that fraud, like I just said, or are there certain income neighborhoods where they target or don't target? Most of the times I don't think this comes into play, especially with automated systems. However, if you got to a point where you were on the bubble between being approved and denied, it is possible that someone doing a manual review may have their own opinions in their head about a certain zip code if they've had experience with it in the past, and those are things that you can't prove, but those are things that maybe do happen sometimes. Number 9 is credit mix. Now, within the credit scoring models, credit mix is something that FICO says is 10% of your credit score, and credit mix means the mix of types of credit that you have. So if you only have credit cards, that's only revolving credit. If you have credit cards and a mortgage loan, or credit cards and an auto loan or whatever, then you have revolving and you have installment loans. So within your credit score, this does matter. It gives you 10% of your credit score, but as far as I'm concerned, when it comes to credit cards, I don't think it's really all that big of a deal in terms of whether you are going to be approved or denied. Yes, it may have a little bit of something to do with it, but probably it's never going to hurt you if you don't have a credit mix. It can help you if you do. If you have a mortgage on top of having credit cards, I think that could help you, but not having it isn't going to hurt you. Number 8, whether you are employed by someone else or you are self-employed. So if you are employed by someone else, if you have a steady paycheck, that is seen as a better risk from the lender side. If you are self-employed, they need to do a lot more homework on you to see how much money you've made in the past, what your prospects are to continue to make that money in the future. You're just a little harder to pin down, and for them to have confidence that the money you've made is the money you are going to continue to make, and whether you are a good risk. So sometimes if you're employed, even if you make less money than someone who is self-employed, the lender might actually see you as a better risk because they know you're going to have, or at least they highly suspect, you're going to have a steady paycheck over time. Number 7 is the overall economic conditions in society. So as I make this video in 2020, we're in the middle of the COVID-19 crisis, and lenders have pulled back from giving out credit cards as freely as they have in the past. So it's an easy example of how this can play into your approval or denial for a credit card. When the economy is great, they're giving out credit cards much easier to people with lower credit scores, even if they have maybe a little less confidence about them. If the economy's doing well, they figured those people are likely to be doing better themselves. When the economy is shakier, as it is now as I make this video, then they are going to pull back and there aren't going to be as many applications being approved. There are going to be a lot more denials. So where this falls in the overall economic conditions sort of within this list, Normally, I wouldn't think that this was hugely important because we just don't even tend to think about it if the economy's, at least okay. It's only when we have times where the economy has really tanked where this seems like it becomes more important. So right now I put it 7 on the list. Maybe it should be even higher as I make this video. In other times, maybe it would even be lower because it's something that we wouldn't even necessarily think too much about. Number 6 is the number of credit cards you already have open, either with a particular lender or just in general. So the first half of that, there are certain banks that are only going to let you have X number of credit cards with them. For example, American Express will let you have 4 revolving credit cards with them, meaning personal or small business cards. They're not going to give you a 5th. It doesn't matter what any of these other factors are, they're just going to say no, and that comes from American Express. They said that earlier this year. Now, on the other hand, sort of looking at the macro level, the credit cards you might have across many different lenders, if a credit card company looks at your history and says this person has, 25 credit cards and they only use 2 of them or whatever, then they might see you as someone who just gets a lot of credit cards to try and get the bonus, or you are getting credit cards but you never use them, and so there's not a real reason to add you as a customer because they know they're going to give you a card that's not really going to get used. The number 5 reason your credit card application might be denied: too little income. The credit card companies want to make money, and if you don't make much money, then you're probably not going to be very profitable for them. And if you have any other risk factors on top of too little income, well, then that can, ding you right off the bat. Now, I think there is something to the fact that your age will also come into play here, because if you are younger and don't have much income, a credit card company might be more likely to actually approve you with the idea that you are going to make more income over time. If you are an older person who doesn't have much income, well, then your prospects for making more money in the future and being a good long-term customer aren't quite as good from their eyes. So income makes a difference, but I also think income in relation to your age can make a difference, because if you are younger, the credit card companies do like to kind of get in on the ground floor with you and hope that you will make more and use their cards more in the future. Number 4 reason you might be dinged is having too many new accounts over the past year or 2. So if you've opened up a lot of credit cards, and other loans on top, well, then that is scarier to a lender. They ask questions like, is this person in financial trouble and so they need a lot of credit? Or maybe they are chasing credit card bonuses, so just opening new accounts to get a upfront bonus and then moving on to the next one. Either one of those things is not desirable from the credit card company's end. So if it looks like you are opening up a lot of accounts in a very short period of time, they are not going to be happy with you. Now, this is different than what I said earlier when I talked about the number of accounts with a certain bank or the number of credit cards overall, because in that case I was talking about over time, not just in a constricted period of 6 months to a year or 2 years. That was overall. This is talking about if you have opened a lot in a short period of time very recently. So now we're getting into the most important pieces here. The number of new accounts is an important piece, and number 3 here is also an important piece, and that is too short of a credit history can be a reason that you are denied. And there are actually 2 sort of aspects to this. Number 1 is you could have a thin file, which means you don't have very many past credit accounts for them to look at. And then number 2 is you might have a very short file in terms of the time that your accounts have been opened. So if you've opened, all of your accounts are all within the last 6 months, well, then that looks a whole lot worse than if your, oldest account is 5 or 6 years old. And the same thing with the number of accounts. If you've had 7 or 8 accounts, well, then they have a lot to go on to sort of look at what your history has been. But if you've only had 1 or 2, then that's obviously a lot less information. And then for many people, of course, you're going to have both the thin file and you're going to have the short history, because when you start out your sort of credit journey, obviously you have to start somewhere. And so you're going to have few accounts, and those accounts aren't going to be very old. But this does factor in, and depending on many of the other conditions we're talking about, it can have a big impact for whether a credit card company says yes or no. All right, number 2, the second most important factor in you getting rejected or approved for a credit card is the amount of debt you have. And there are actually 2 factors to this. The first is how much debt you have in relation to how much available credit you have, something we talk about in a lot of videos. credit utilization. So if you have $5,000 of available credit and you are using $4,000, you have $4,000 in balances, that's not so good. You're using 80% of the credit that you have available to you. If you had that same $5,000 of available credit and you're only using 500 of it, that's only 10%, and that looks much better. You don't look like you're greedy for credit or that you need that credit so bad that you're running all the way up to your limit. And then the second factor is purely the number in terms of how high your debt is. So obviously if you have $1,000 worth of debt, that's not as bad as having $9,000 worth of debt. And this to some extent can also be how much debt you have in relation to how much income you are making. So if you have a higher amount of debt but you make a ton of money, well then that might not factor in so much. But if you have a decent amount of debt and your income is not so good, well then that is going to hurt you too. So the credit card companies want to get paid back, and if you have too much debt, that makes them worried that they might not get paid back if they give you a credit card. And then you might be able to guess what the number one factor is when it comes to your credit card application being denied. If you have a bad payment history, perhaps even a bankruptcy in your past, well then that can sink you no matter what the other factors look like that we just talked about. Like I said, banks want to know they're going to get paid back. And if you have a history of paying late or not paying at all, well then obviously you are a huge risk to them. So that is the most important thing. Even if you are someone that doesn't have much of a credit history, if you have shown that you always pay your bills on time and you've never defaulted on a loan, well then you are going to look a lot better than somebody else that maybe has a long credit history but has gone through bankruptcy or has completely defaulted on a particular loan or has had to go into collections multiple times before the card company got paid. So number one, pay your bills on time if you want to be approved for future credit cards. And if you have a past of not paying your bills on time, that is the number one factor that could sink you and make you be denied for a new credit card. What all these factors boil down to is confidence. How confident is the lender that you are going to be a profitable customer, or at the very least a neutral customer that is not going to lose them money? So if you get dinged for a credit card, that you want to think about your own history to try to figure out what the factors were that came into play. Do you have a history of making late payments? What is your income? Do you have too much debt? How many credit cards have you gotten in the recent past? And all of the other things that I talked about, any of those could come into play in any combination, and each lender is going to look at all of those things a little bit differently. But those are the main reasons why you could get rejected. In most cases, like I said, it's going to be a combination of those reasons. That's it. Questions, comments, suggestions, put them in the comments section below and I'll do my best to answer them if I can. Otherwise, I thank you for watching, and as always, please go to proudmoney.com, where we do credit card reviews, we talk personal finance, we talk deals, and all sorts of other fun stuff too. Thank you for watching. Bye.